The biggest monthly news event is coming soon, but will bad news be considered good again? Today we take a look at what that means for US recession probabilities and also what it means for the market moving forward. We also need to discuss insider trading. The hottest stock in the markets right now just saw 25 million in outflows, and it comes from a board member. Does this matter? Where do we get the information? We'll talk about it today. So with the S&P 500 being at the most traded level of the last 1.5 months, and with dark pool trades going on all over the place, how do we position ahead of non-farm payrolls? Well, Apple trades itself at the golden fib, and of course yields focus on breakouts either way. There's sure to be a huge move. Well, welcome back everybody to the Daily Show, where we discuss markets around the world, including the macro, leading indicators, and of course the hottest charts. We've got some big ones coming up today's show, so stick around and make sure to subscribe if you enjoy anything to do with the markets. Let's talk about healthcare. It was down over the session. Something that's been pretty hot and defensive over the last couple of months has suddenly just taken a big nosedive. At the same point, we saw some strength in particular stocks, but not across the whole market. It was more of a holding pattern with some relatively decent trade volumes. So we mentioned insider trading coming in from, of course, one of the board members at Nvidia. Is this normal? Well, you can see back in history, it is totally normal, and it's pretty expected that someone like Mark Stevens will generally sell a bigger position. And of course, it's nice to be him selling at $489. But when you go through the SEC forms and the filings, which you can do over on FinViz, and then scroll through the stocks themselves, you'll be able to see things like upgrades and everything else from here as well. And you can see Nvidia is getting some amazing upgrades coming through over the last couple of weeks. Let's talk about central bank liquidity though. What's going on with Bank of China, and basically why are they injecting? Well, secretly behind closed doors, they've started to inject into the market. And this is because they're trying to support all of the problems they've got specifically around their property market. You can see here the overall injection of the People's Bank of China and what's happened with generally world economic momentum. And when you see a big pullback, it does tend to move markets around the world. This is an overlay taken over the last kind of like 5-6 years. And you can see there's some pretty significant movements that have occurred over that time based on injections of liquidity. So will we now start to see momentum pick up through September? A lot of that will come from a huge injection that some people are expecting to come around that time. What about corporates versus retail? Are we buying? Well, the answer is yes. Last week we did buy, last 4-week average. We basically stayed flat even, and institutions have been buying fairly strong over the last 4 weeks. Hedge funds, though, have either got it really right or really wrong. Hedge fund flow has been down over the last week as the markets have basically rallied. So that means that they're betting on a bad September. The problem is, are hedge funds going to be correct? Let us know in your comments down below, and we'll find out whether hedge funds, retail, or, of course, institutions are going to be correct over the next couple of weeks and months. This is what tends to happen in years such as this, where we've had an over 15% gain from January all the way to July. And when we get that, we usually get a maximum average drawdown of -8. We've only seen -5 this year so far. And of course, we have a current standing of about -2 with a 20% average over the 31st of December all the way to the 31st of July. We do expect an overall positive move into the markets for the end of the year, but that usually comes in October, November, and December. -22% marked 1987. So yeah, that was a very important point. Seasonal trends, if we took everything into consideration, then it would show us that we are coming into the weakest month of the year. But as we know, in pre-election years, it looks a little bit different. We're actually around here at this point because, of course, we've started September. So if we're going to have that big sell-off, it tends to happen just after the middle of September, which funnily enough leads into what we call OPEX, which is also going to be a quad witching event. Make sure to stick around if you're not sure what those things are, because the big options expiration of September is one of the best statistics that goes around in markets. Bullish percent index did increase for another day, which is a good sign. If we do keep seeing this rip higher, then it probably means we are going to a new high on the market. So we'll be watching that indicator very closely. And of course, we're also looking at liquidity stress. Now, just around Jackson Hole Symposium, we saw liquidity stress index get wild. And that was showing us things such as what we had in 2022. Silicon Valley Bank, UK gilt crisis. Generally, if yields are approaching, especially it seems the US 10-year going to new highs, we're tending to see something break in the system. Now, if non-farm payrolls forces this US 10-year back up, expect a break just about to happen. That's what's happened before when every time we've gone there, and we'll be watching this very closely. Remember, yields make a big difference in the markets right now. New survey reports are in. Everyone's still bearish, which is, of course, good for the bulls. And it helps to kind of say that maybe that was the base. It's not super bearish. You can see it dropped a couple of percentage points here, and a few people turned bull over from the Tuesday. I would probably state that as of this date, if we took a survey, we'd probably see there's a little bit more bulls. And I would think it's probably around 35% bulls to probably about 32% bears. But overall, yep, pretty much still quite a lot of bears, and it does show that we may have hit the low. Let's now talk about random liquidity coming through. So Tesla returns back to a zone that we've seen many trades at before. Yes, this has been one of the most traded zones for Tesla, and we're getting into it. And of course, within a few dollars here, we're basically going to hit the most traded zone. If Tesla does rip a little bit higher, that we'll look at on the charts later on during the news event or just after it, that could be a point that could trigger sells, and we'll look at that on those charts. The S&P 500, as we mentioned, has gone back to what we call a defended zone. This is an area that has seen a lot of trade on it, and we got even more trade over the last 24 hours. We got number 57th most trade for, of course, SSO, which is the ProShares Ultra S&P, right around this zone. We also have seen, of course, 3 times BearX funds getting some large trades in them. You can see the previous time this happened, they were correct. And of course, SQQQ as well, getting some large trades on them. And what this is doing is, of course, positioning potentially here for the movement up. Now, you could also say, well, it's profit targeting from this zone. So we don't quite know, but once we get price action activation, which we'll talk about later on today, after this non-farm payrolls event, we should see their hand. We also saw ProShares Ultra Semiconductors getting a little bit of trade on them. And this is all going to be very, very interesting moving forward. Let's now jump on over to options. What did we have in terms of random trade on options? Well, it was a bit of a slow day on the options world, but we did see some nice trade coming through from Amazon, 3 times calls to puts ratio here. We also saw Apple, J&J continues to be a little bit higher, and Broadcom getting a 3 rating, which is pretty high. Now, if we scroll down, you'll see that it was 55% calls and 45% puts entered in on the day. So maybe a little bit of a bullish tinge coming into non-farm payrolls. And that's a higher number than we've seen, which has generally been about 52% calls, 48% puts in recent days. It could show that there's a little bit of retail stacked towards the bull side for non-farm payrolls. Let's have a look now at what's going on with rotation. Last 5 days of trade, technology, semiconductors, and a surprising one, but also one that was heavily sold off. Solar has done well, 4.92% up, and that actually hit a pretty significant low in recent trades only about 4 or 5 days ago. Could it be turn point for clean energy and solar? Certainly could be. Absolutely no move towards defensives. This is certainly a very bullish sign for bulls because defensives didn't get any love in the last 24 hours either. As we mentioned, healthcare, horrible down here. Healthcare negative 1.19, utilities negative 1% overall. All right, let's jump into the charts and take a look at what's going on. So we'll start off here with the US 10Y, and you can see that it is still hovering around near the highs, but not a new high. Now, if the new high does happen, get ready for something to most likely break in the system. We've already talked about that many times. A bad jobs number is probably going to be really good. So what a bad jobs number means is that actually unemployment is going to be technically spiking, and we're going to see things like the US 10-year, 2-year, etc. start to drop in expectations of a rate cut coming. We already have spoken about this before, but you're looking for US 02Y to cross below US 10Y before any recession ever gets called. Generally, it's a mixture of this and the jobs number. So this will be a very interesting one. We're looking for it underneath 1. We haven't got that yet. Of course, we're well above in inversion territory, and the longer we remain in inversion generally means there's something a little bit more sinister in the horizon. At least that's what the bonds market's telling us. But let's jump into some other things here. Treasuries have improved. Treasuries might break through 97.38. I think if that does happen, we've probably solidified the lows in Treasuries, although I did suspect that maybe we'd get an 88.90 in Treasuries. I like all these levels as a longer term investor. I think it's all pretty good. Any from here to here is pretty nice levels, I think. And I think a lot of people are looking at it saying, well, on average, that's a great return. Over 4% on Treasuries is pretty spectacular. Let's take a look at the volatility of the volatility. The VVIX did spike up over the last 24 hours, but still nothing compared to where it usually gets to. Maybe non-farm payrolls will finally spike volatility once again. But yeah, the volatility index has been horrendous. Take a look at the VIX here. It'll just load it on the chart. 13.56. That's taken us down to the new low and this original reaction level. 12.12 marks the pre-COVID lows. So the VIX can still go lower, don't get me wrong, can go all the way to 12. But at this stage, yeah, volatility has completely dropped out of the market. And usually it would be kind of increasing around this period of time during non-pre-election normal years. What about the market? Does it look like this is a false rally? Well, if it's going to be a false rally, it needs to tell us right now. Generally speaking, this percentage of stocks above 20-day moving average tells us quite a lot about the market. In fact, what it usually tells us is whether we're getting like a bit of a false rally, dead cat bounce, as they often call it, into a sell-off. We don't want it really above this red line. If you're a bear, if you're a bull, you're like, yep, bring it above this so we can keep moving higher. And it looks like we're going to make that decision pretty fast. Skew index didn't get crushed. It keeps going up. Again, good for the bulls, bad for the bears. And if we have a look at the metals markets, they seem to be quite in the middle zone. Basically, copper's doing nothing. And look at iron ore, stuck inside a previous day trade, basically just still stuck, coiling, getting ready for a big move. Could be an explosion there for some large trades. We've already talked about Vale before, and we've also talked about some other iron ore stocks. Let's have a look at the US dollar. It did find some resurgence. It's come back to this level, and it's taken out the high. So it could be that the US dollar will spike a little bit higher during non-farm payrolls event. And I'm going to be looking around that 104, 103.90 to see what reactions happen there. If we don't get that and we just kind of get an instant sell-off, do look for buys back into that zone. So somewhere around that 103.16, they're going to be technical levels that you'll want to be watching. Let's move over to gold. Gold continues its strengthening, even though dollar was actually relatively good over the last 24 hours. So gold still trying to get maybe towards that 1962 that we've talked about, but I think GDX looks a lot more interesting here. The gold stocks, they took a high, they're pulling back down, that's good. Somewhere around 28.50 could be a very interesting level for gold stocks, and we'll be watching those on the charts closely after this non-farm payrolls event. This is a big one here, US oil, breakout. Yeah, the daily did break previously. We talked about how this was higher. Big session on oil. I'm not trading at the moment. I've already talked about that a few times. But we expected maybe some sellers to come through here. We never saw any activations, so there was no trade. But now that this is happening, if that closes a week above, it's kind of telling us inflation's still around, because what that expectation is that oil would then move towards potentially 90 to even 92 a barrel. Now, no one's going to like that, but that's kind of what oil is showing us. This is going to be a very interesting 24 hours for oil and, of course, commodities around the world. AAPL, let's go into single stocks before we go to the indices. Well, I think it's clear what Apple's hit, and it's hit the 61.8. Saw a little rejection off this. It's exactly what we expect so far. Really nice return back up to it. I think some people will take profit before non-farms. That's what we're probably seeing. It's possible, of course, it still goes to new all-time highs. It's just a little resistance that we've seen there. And of course, this is across quite a few stocks. Let's look at semiconductors. So semiconductors are in what I would call a break-even zone. If you picked up somewhere in here, this is a good resistance zone. So certainly a break-even, TP, whatever else it might be, descale position. We've seen large trades on USO go through here. And we know that if we break to a new high, it's going to be on for semiconductors. Expect even more rallying to go through. Important 24 hours for that one. Tesla, now already back in a lot of trade, but the big key zone is going to be this green box. Now with Tesla, if it does end up coming out of the gates really strong and then it sells off from there, this is where I'd expect the bears to be. Up until that point, it's going to be hard to tell. You do have, a little bit of supply that led to a big sell-off, so I could see why there's sellers here. Buyers probably trying to cover a little bit. But if you're a long-term investor, of course, there are quite a lot of positive catalysts for Tesla coming up, new announcements towards the Model 3 and improvements there, Cybertruck, and I'm sure many other things as well that are catalysts. But this does, at this stage, look like a very aggressive kind of return, which is, typical of Tesla. If it is going to pull back and you want to look for buys, you're looking in this zone now. And we still maintain it's possible to go back to 200, 210. But remember, even like we talked about, then when we hit this down this level, we thought, we might get that 200, and we just missed 210, which was our first target. So I think, it's done this twice now where we got to, I think last time 154. A few of you still messaged me about this one, say, where's my 140, man? Yeah, we just didn't get it. We actually got an island reversal off that. We got an island reversal off this. And that's why this time around we said, well, looks like it's going to do a little rip. It did. Better than expected so far. We'll have to see how it ends up playing out. CQQQ does still look pretty strong. We already know that People's Bank of China is basically injecting capital. So clearly it's trying to support this. Something's going on around this level. This 38 zone seems to be basically getting injections each time it goes down it. Maybe it's an invisible wall on that market. Most traded zone was tapped by a few different things recently. We saw the Australian market tap it, came down, waiting again for the jobs numbers. Yeah, I'd say it's probably more short here than long, but we'll find out. The German market's interesting because although this looks like a Wyckoff distribution, you don't really want it to break out. I wouldn't take either side here. If I was in the long, I'd feel a lot more comfortable than the short now. Double bottom coming through potentially, and there's a lot of pressure on this high. First sell here was exceptional, but now, I don't know. I'm kind of neutral on that pair, I think. US 2000s, little rejection, not much to state. If we do end up going to 1923, watch the reaction that could happen here. Non-farm payrolls, often we say patience, react, don't predict. Sometimes markets choose to get liquidity, something like that, or even like this, where they come back down to the most traded zone and then they bounce. Often the first move from non-farms can be false. It can last like up to an hour and then it goes off in the opposite direction. If you've watched enough of them, you'd know what I'm talking about. Let's move over to the Qs. The Qs did a pretty good day, and then they basically sold back off. I would call it pretty much a neutral session. If we look at the NASDAQ, you'll see what I mean. But it does still make a series of higher peaks and higher troughs and higher peaks and higher troughs and higher peaks and higher troughs. So it is still above the daily 20, and it's still doing this. No change of trend at this stage. No sell at this stage. We're looking for things like 15,322 to be taken in the next 24 hours to the low side, and that to signify, okay, maybe some sellers who've got control. But even here, even if the sellers come in now, they're going to hit this 20 and maybe find buyers coming back through. So it's going to be a tough one on the Qs, but I think the S&P 500 presents much better. Golden pocket ratio, biggest trade level, sitting around that 45.06 zone. We did put a little shooting star into this event. I could see it easily steal that. There'll be stop losses taken here. Of course, movement back down to 44.40 is now more the consideration. And what happens there could be buyers recommence. 20 moving average has been super solid. A lot of dynamic resistances, a lot of dynamic supports. So, we kind of expect that to be a possibility. If it does keep selling through this zone, then we make even lower. And of course, if we get through 43.30, we think that it's 4,200, 41.50 at that point. Next 24 hours, very important for these markets, as you can see here, but the trend does remain bullish on the smaller time frame and most traded zone on the higher time frame. So critical level. Bitcoin, interesting, back down all the way from the most traded level all the way back down into this range. And it's basically hit the most traded level in the range now. So this is where you suspect some buyer will try to have a look at it, but it doesn't exactly look positive. Take a look at this weekly. If that closed like that, very negative. So we're watching this probably for the weekly close, and we've talked a little bit about halving events, and we'll bring that up again in the weekend video, where basically if this thing closes lower, especially if it closes to a new low, we expect it to move down to something like around 22,000 and then possibly even lower after that. And we'll discuss that if it does happen. Bad looking candle for now though. Week's not closed. We'll find out. Non-farm payrolls. So on to the news now. And of course, we've got big news coming. It's non-farm payrolls. It's expected that the jobs numbers are going to come in weaker. And just remember, when jobs come in weaker and we see an unemployment rate spike up, that is, things get worse, generally that means we're around 3 to 6 months when we have inverted yield curves, which we still do, from a US recession. At least that's the stat on average in the past. So while bad news is going to be considered good news by the market, maybe, because it means that maybe we're getting rate cuts, do remember that the only reason rate cuts will be in the market is because economic data will be weakening and therefore the US might be going into a recession. So it'll last for a little while. It's a bit weird. It's all backwards. But of course, at the moment, we think following price action is going to be the best course of strategy. Thanks so much for watching. If you enjoyed today's video, subscribe, smash that like button. We'll see you in the next one. Bye for now.